but as we all know right now, real estate and everything has been, going up, and $1 million is not like it used to be. But once you get above $1 million, we have investors that will do non-recourse at the higher loan to values. We have one investor that, off the top of my head, as long as you're putting at least 35% down, they will not make you do recourse. It is a true non-recourse loan, but you're putting 35% down in that situation.
Right.
So there are loans out there that have non-recourse, but you're putting more skin in the game, or it has to be above a certain dollar amount to qualify for that, because it's all about the project specifically at that point.
And the cash flow of the project itself. Okay. Thank you, sir.
No problem, Daryl. Thank you. Any other questions on the difference between a bank and a lender bank broker at this point? All right. So think about getting into commercial real estate. It's one thing that commercial real estate always has so many variables, and a lot of those are never determined truly until the very end. So the difference between being in the residential world, where we lock you, 30-day lock, here's your rate, it's not going to change, because we've already done the criteria essentially of your credit, your income, outside the appraisal doing something weird. Those rates are generally locked up front, and you're not going to have any changes. Right now in the commercial market, especially as much volatility as there is right now, a lot of the investors do not want to lock a rate until they have your full package, because the capital markets is moving relatively quickly with how much the Fed is raising rates. Fed's getting ready to raise rates here again in September. That will make that market shudder, I guess, a good way of putting it, because it's now the cost of borrowing the money to where they can lend it out is being squeezed and squeezed and squeezed. So just, if I give one piece of advice when you go into it, you just know that the variables will change based off of every little thing that comes in. I mean, your insurance policy coming in, the taxes coming in. I mean, we're at the time of the year right now where the taxes are changed. All the new tax bills are coming out. And if we had your coverage ratio here, and all of a sudden tax values went up, new tax rate, that can change things. So just, you've got to be a little patient with this world on the commercial stuff, because it's not going to be locked up front like if you're used to doing residential stuff. Other thing outside of that, dealing with a lot of people that do different size projects, fund different size projects. It's interesting. A common conversation that I have with a lot of people is that they will put the same amount or even more energy into a smaller transaction than they do for a larger transaction. And again, small and large can be different for everybody. So I'm not saying it's got to be above this or below that, but it's just make sure that you're spending your time on something that's going to reward you and be worth your time. And that's just a common conversation that I've had throughout the years, no matter who I talk with, that they just really say that they just would rather, concentrate on the things that are really going to pay you back well, instead of just grinding on the smaller transactions that are going to take as much time as the bigger ones. So I don't know if there's anybody else on here that agrees with that conversation or that comment, or, disagrees with it.
Amen.
Thank you.
Patrick, this is Matt. I'm fixing to agree with that on my next few transactions as they get larger.
So you're moving up, right?
Yes, I am. Thanks.
Yeah. No, it's really amazed me. I had lunch with a gentleman on Tuesday before I had to drive over and drop Jake off, and he's only been doing this for 2.5 years. He was a football player at Washington State, running back, and I said, "How long have you been doing this?" And 2.5 years, and he's gone through 18 1031 transactions right now, and in less than literally 2.5 years has accumulated a couple $1 million in net profit, basically. And it was just interesting talking to him, because we help a lot of people who own a residential mortgage company. I help people start from the single families, the duplex, the tris, and the quads. And he literally went straight into that commercial market, bought a 3-story commercial building out in Idaho, and did all the work to it, got it refitted, got a small a tenant in there that was regional for that area, revitalized it, and just kind of how he started. And it was interesting. It's just the ballpark that you play in and where you start, it always becomes smaller, that you're always wanting to move up and move up and move up to that bigger ball field. So it was just an interesting thought, because I know that I started with a single wide and got to my mobile home park, which for me, that was a good run up in success. But starting off at something big and just going bigger really is intriguing. So I would just I would challenge you to challenge yourself to really think, can I push myself up to that next level, and get uncomfortable and really go after those bigger deals to learn those, because once you learn those, you just go to the bigger ones. Other than that, here's my contact information. I think a lot of people on this call I have spoke with in the past, and I appreciate the new people that are on here that have come and listened to me talk. Cell phone number is the best number to reach me at. Again, I'm in Wilmington, North Carolina, but I do travel around and speak to RIA groups, bigger pocket groups, stuff like that, just to have some one-on-one conversation with people. So if I can do anything to help anybody, please feel free to reach out. It's really what I love doing, is to help people grow their net worth and watch them grow.
Just so y'all know, MC does have a Raleigh office as well, and they usually have, it's not Patrick himself, but he has someone there at almost every single main meeting. So please come, and they're there all the time, and they love to talk to you. Also, come and ask them your questions about any of these kind of deals.
Yeah, it's always Patrick Bailey, isn't it, Patrick? Is that who comes?
It is.
The other
we keep it easy. It's two Patricks.
Yeah. Are there any more questions, guys? Comments? Unmute if you would like and ask.
Patrick, hey, can you explain a little bit in the commercial arena about the SOFR versus, in the way that they used to price, I guess, the money is, are there still two different approaches to that environment right now?
You're talking about how money gets priced out on projects?
Well, don't they have the like, isn't it called SOFR, where they take the daily rate? It's a little bit different than like your fixed rate that you do, or is that not done anymore?
Right. You're talking about because the LIBOR's gone and they've moved over to
Yes.
the SOFR. Yeah, I mean, basically it's just the overnight lending rate essentially, and then what the cost of the money is to be able to borrow it from the Fed. And so that's what's been going up, and so that's why rates are going up in the commercial world, because they're, it's all leverage game. Whether it's us borrowing it from them, they're borrowing it from the Fed. Basically, what you're looking at is the cost for them has gone up, so they're going to make the rates to borrow for them go up. So they're basically arbitraging the difference in the middle.
So how does that impact our underwriting? Is it really different than a fixed rate? Like when I underwrite, I put the current fixed rate into my underwriting. If they are averaging it every day, does that overall come out to be the fixed rate, basically?
So in our world, and I'm saying in our world, I mean, that I deal with, I mean, everything is going to be a fixed term where there can be what's called an interest guarantee on it, to where if it is paid off within that time period, the interest that's owed on it would still have to be paid. So from the world that I everything that we deal with is a fixed rate. I think what you're talking about is some of the adjustable products that if they don't make the yield that they were anticipating, that they can charge you on the back end.
Okay.
Yeah, so everything that we deal with is a fixed rate. All of ours gets bundled up, securitized, either sold to an insurance company. I mean, that's generally the biggest taker of what we're doing from a capital standpoint, fixed product. A lot of the banks and a lot of the wealth management, they have different products when it comes to commercial, because they can give you monthly, 3 month, 6 month interest yields, basically, that determines what your payment is, where they are on tied to an index. I don't mess with any of those.
Index. Okay. Okay.
Yeah.
Patrick, Daryl
Answer
here.
that for you?
Yes. Thank you.
No problem.
Patrick,
Oh, go ahead.
I'm sorry. Daryl here again. On that note, from your investors, you get a pricing sheet on your basis points to add to that particular rate to come to a final rate, whether it's fixed or variable. Back in the day, I don't know if people remember Greenpoint Mortgage or most of the banks from the West Coast, they would fax over a daily pricing sheet 3 times a day with their different incremental increases based on property and number of families and credit scores and so forth. Would that be the same thing for you?
Yeah, I mean, at this point, thank goodness we don't have to wait for the fax machine to come through. I do remember those days. At this point, a lot of it is just understanding the project and what we're doing. And at that point, I mean, I kind of know who to call based off of what we're doing, and they're all in competition with each other. I mean, that's the good part about it, of dealing with a true independent mortgage broker. I am not captive to anybody, and I can always go and kind of pivot the banks against each other. If I know I've got a great deal, like, hey, here's what I've got here, you know, can you give us better pricing? Because I mean, my job at the end of the day is I'm working for you. And that's, I'm not working for the bank. I mean, and that's the difference of a true independent mortgage broker, mortgage banker, mortgage lender, is that we are truly here to make sure that we're finding you the best transaction based off of your particular variables for that transaction. Does that make sense?
Yes, sir. Thank you.
And just to call out, Patrick, like on that note, in my opinion, having a lender broker is actually a better relationship than just an individual bank, because a bank may lend one time and not the next time. Whereas somebody like Patrick, they will work with you to go farm out to all their contacts and find somebody who will fund your deal. So to me, that's almost that's a better contact than just one bank. Patrick, what rates are you closing commercial properties on like this week, and where do you see rates, 6 months, 12 months from now?
Right. So on our commercial stuff, I mean, most of the rates right now, and just to kind of give you a range, because every deal is different, but most of them right now are generally in, let's just say, DSCR loans, Airbnbs, those kind of things. Most of those are going to be anywhere from 7 on the low end up to, if we're going to no ratio to where we're just giving you the money basically without looking at anything, you're probably going to be around 8.5. So, but what can change that is loan to value, your credit scores, how much do you have in reserves, how are you experienced? In other words, have you done projects before, or is this just your first couple? And so those are all the different variables that I've got to figure out of where to go to what bank that can help assist you in what you're doing. But right now, I mean, even with my bank people that I know that I talk to, and we run through projects and go through things. I mean, most of them are pushing, 6s. I mean, that's even, they're pushing, 5.5, 6.5, somewhere in that range. There's no more 4s, there's no more 3s. Even at bank money from the deals that we're talking with people. And going up, I mean, from here, what do I think is going to happen? I mean, we know the Fed's going to raise rates here next month. I mean, it's anticipated they're going to raise it 75 bips, that would be the last one at 75, and then 2 more at 50 bips by the end of the year. And then that should be it. But as we know, this pendulum always goes one way too far this way, and then always too far this way. So if we're pushing, really that high by the end of the year, I mean, we're pushing almost 4% just borrowing money from the window, and generally, that spread's going to be 3 to 4% on top of that. So, my guess is as good as anybody else's. I'd be sitting on a yacht in the Bahamas if I had the right, the correct answer, and if I knew that much. But I would tell you that it's the good part about us being investors is it either works or it doesn't. If you're going to give me enough cash flow, I'm not into this to speculate. It's going to kick off cash because it's a guard against inflation. So if the numbers work today and I can get it locked in, no matter what, it's always going to make sense in the future.
Well,
Because rents aren't going to go down.
No, they're not. They're not going to go down right now. I mean, generally and just doing this for a while and charting rates and studying rates as I got into this industry, about every 7 years, if you go back and chart for a while, we generally have a new low. We have a new low. We have a new low. Now, granted, I mean, we just had a very interesting, a new low here, 2 years ago, let's say a year to get 2 years ago. And right now, I know that our mortgage industry is anticipating anywhere from 2025 to 2027 that we will see those lows again, if not new lows, to where a 30-year fix was essentially around 2.75, that we should touch that again because some event will happen generally every 5 to 7 years, just like event happens in all of our lives every 5 to 7 years, that things change, that we should see some changes there. Now, outside of an event happening, the rates right now are continue to, in the commercial world, to continue to go up a little bit. Residential world, they've actually stabled because what the Fed's doing with prime is actually not controlling mortgage-backed securities, because that is more of other countries buying our debt, insurance companies buying our debt, not really what the Fed's doing. The Fed is just controlling what credit cards, home equity lines, what people are making in their savings account.
When you talk about, when you do your experience based on your experience, what about, like if there's an investor has years and lots of experience of doing single family, like fix and flips and long-term rentals and short-term rentals, but they're doing like their first commercial deal. How does that factor in?
Well, it depends on what kind of commercial deal they're going into. Generally, I mean, are you talking like going from, just single family, duplex, tris, and quads to going up trying to do an apartment complex?
No, so if you've just done single family and you're just going up to maybe a quad.
Then you're fine. We will actually look at it all the same. It's all about the cash flow of the property. So going from a single family to a quad is the exact same underwriting. The only difference that you're going to have, let's just say that you're going full doc, let's just go back over the residential world. On a single family residence, you can literally put 15% down and buy an investment property. If you're going to buy a duplex, tri, or quad, you're going to have to put 25% down to be able to buy those. Now, don't ask me why. I think duplex, tris, and quads are safer. They kick off more money. If one tenant doesn't pay, you've got the other ones at least paying. But right now, Fannie and Freddie require you to have more skin in the game for a duplex, tri, or quad. On our commercial side, we're pretty much at 80%, whether it's a single family, duplex, tri, or quad anyway. So it doesn't matter in that world.
Got it.
So how fast you can close a commercial deal?
So literally, and here's what it boils down to. And I have to have this conversation with everybody. Like, look, if you want to be guaranteed a rate up front, then I will tell you it'll take you about 30 days. And generally what we're waiting on is the appraisal. If you are, I have one investor that I really, really love, but they will not let me lock it until they have a full package. And I mean everything. But generally we closed one 3 weeks ago in about 12 days with them.
Wow.
So, I mean, it just depends on, how, and again, their rates are a little bit higher, but they always deliver.
What you mean the full package? What do you need?
So basically, they're going to want when you're doing a commercial loan, we've got to get all your legal documents. We got to get your operating agreement. We got to get your entity documents. We got to get the appraisal in, the title work, the insurance, all those things to come in. So generally up front, I mean, what we're doing is we are pre-approving you based off of your credit and your assets. I mean, that is really our job on our side. If we know that we are going to do a DSCR loan, we unfortunately have to wait till that appraisal comes in to find out what they put on the 1007, which is what's called a comparable rent schedule. That comparable rent schedule can determine whether or not, if let's just say it came in at $1,000 on the comparable rent schedule, and we were expecting it to come in at $1,250, to where your DSCR was at 1.25, but all of a sudden, it's at 1, that can be a different kind of rate than as if you were at 1.25, because that's more profitability. So a lot of times it's waiting on that appraisal. I mean, that's really, in the investor world, we're always at the mercy of how that appraisal is going to come in from a value standpoint and what they say the market rent's going to be for that subject property, no matter how many units are involved with it.
So normally, how many days your appraiser will take?
Well, see, the thing about the appraisals, we don't order them directly. We have a appraisal management board set up to where we basically have to order through that, essentially. So we can't just order them directly anymore. Just like in the residential world with the HVCC law, where the government said that they did not want the finance company in communication with the appraiser, so that way that we couldn't manipulate it anyway. The commercial world is still the same. They don't want us ordering them directly. They want them to go through a third party, so that way we're not kind of telling them, hey, I need this much in rent or I need this much in value. So they've created a filter in between us, so we can't manipulate that in any way.
Gotcha. Thank you.
I have another question.
Circumstances where you do not have to have an appraisal?
We do. In the Fannie Freddie world, for the full doc stuff, we can get what's called property inspection waivers, based off of the data essentially that's there for that property. And as long as you're putting as much skin in the game, there's a certain requirement that you've got to put in for each kind of transaction. As long as you're putting that much down and there's enough data for that property, we can get what's called a property inspection waiver. In the residential world. In the commercial world, you're always going to have an appraisal because it's about the cash flow of that subject property. But in the residential world with Fannie Freddie, we have gotten property inspection waivers even on investment property purchases.
I think Matt had another question.
Oh, thank you very much. Yeah, I did. This has been really, really good. Thank you for this discussion. Patrick, two things have come to my mind that I'd like to ask you. Thinking about a commercial strip center or a small multi-unit office / warehouse, I'm used to hearing that it's a 7-year term or a 5-year term. I don't hear 30-year fixed money. So is that available? That's my first question. And then my second question. Go ahead.
Yeah. So for those projects for what we have access to in the for Wall Street money, those are 30-year amortization transactions that we have for strip malls, for office complex, those things.
So the amortization is that, but what about the term? Does it come due?
No, it's a fixed. It's a 30-year fix. I mean, I literally have invested. I've done strip malls before where it's a 30-year fix where actually the interest rate declined every 5 years.
Wow.
It started off at 8, it went to 7.5, it went to 7, it went to 6.5 every 5 years.
Wow.
They're incentivizing you to stay in it.
Right. Okay. Thank you very much. And I can talk to you about that in the future. And then the second one is, you mentioned tonight that when you're in the final part of the process of closing on a property, like I just mentioned, that the payment can change, terms can change depending on the appraisal, the taxes, and the LTV, and some other things. I guess that was new information for me, but I can easily see why. It's similar to a DSCR, right? And so, any other comments on that? Like, how does a buyer prepare for those contingencies, or I guess just have? Well, I'll stop there. Let you answer.
Yeah, well, I mean, that's the thing about the commercial, because it's not only the facts that you're gathering of the taxes, the insurance, when the value comes in, it's also what the commercial markets. I mean, the commercial market is very fluid, I guess, good way of putting it, and that's why you can it's hard to guarantee somebody up front, here is what your rate's going to be without having all the variables removed. It happened in the spring, really, and I think it was like around March, February, March, when all the rates started moving real quickly. There were literally institutions that went out of business because it made 0 sense for them to close everything on their ribbon, on their tape, basically, because they had nowhere to sell it, and they would have had to been servicing it, and they would never have replenished their capital to stay in business. So it's not just the forces of the project, it's the forces of the liquidity of the commercial markets that are always fluid based off of what's going on in the economy at all times. So that's why I just try to warn people, like, just got to make sure that you're what you start off as is probably not what you're going to finish with in the commercial world, because there is going to be some kind of variable that changes along the way.
Thank you.
Any other questions, Matt?
No, that does it for me. Thank you.
Okay. Thanks for being involved.
Yeah.
Any last questions for Patrick? Cool. All right.
Guys, I appreciate y'all having me. So thank you.
Yeah, thank you, Patrick. Super informative. I really appreciate it. Thanks, everybody. We'll see you next month for Justin's case study on a multifamily property. Have a good one.
Bye, guys.
Thank you, Patrick.
No problem. Thank you. Aaron, how'd they go?
It was great. Thank you. It was wonderful. I think my husband's hanging on there.
I'm glad people start asking questions. It always goes easier that way.
I know.
Good.
I know.
Good.
Yeah.
You did a great job.
Yeah. Mike, can you not unpicture yourself? Are you afraid to, do you look that bad? Are you afraid Kathy might jump through that Zoom and grab you?
Because you're so hot.
I don't think that'll be it.
All right, I prefer to sleep with your wife.
We're very good bedmates.
I'm actually sitting in my massage chair. I didn't think that was very polite to do that.
Patrick,
That's
the running joke is when we travel together, Kathy and I always sleep in the same bed because we never move, and the rest of them are like flounder jumping around. So Kathy and I always share a bed. So that's the running joke. I sleep with Kathy more than my husband.
Hey, you might want to cut off the recording at this point. I just noticed it was still recording.
Kathy, where do we cut it?
I'll do it.
Yeah.
Okay.
Yeah, we just
Edit this.
We can edit.
we'll just remember to edit.
Mike's like, let it keep going. Let it keep going.
Yeah.
I got it, Karen.
Yeah,
Yeah, we'll
thank
just
you.
remember to edit.
Mike,